The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, early edition, 8:06 a.m. on this Wednesday, the 23rd of April, and we're looking at a huge move up. So let's just get this right. So the Dow futures are up 662 at 40,019. The Dow cash yesterday closed. There was an interesting session because had a big move up on always on news, big new move up, and then at 1,100 points up, it comes back to only plus 600. And I thought this could be it if it holds, or it's going to be it because it keeps going down. But it held and it went close to the high of the session. Fabulous action. And then overnight, it's had another over 600 point move. That's the power of news. So let me just show you this. This is the futures right now. So the pattern we're looking at, let me go to the YM, which is the Dow futures, up 657 at 40,016. So we were here yesterday. We were actually down here early in the morning. And I thought to myself, all right, if this is going to be, if there's any news that really comes out, and GE had come out with good news, I thought this is a good start. There were a couple of things that were just quite positive. If this is going to be good, this arch pattern that we're looking at here, let me just show you the pattern that I'm always looking at here, and that is straight up, straight down, cup formation, arch formation, or a mix of 1 and 2 and 1 and 3. In this case, it's 1 and 3, where you get the dreaded H and you arch over and you fail to take out the left side low. But if that right side holds, you can have another arch formation that goes from, I've been talking about this with subscribers for a little while, that a lowercase h can go to a lowercase m. So I thought to myself, okay, at this point with the futures up sharply, and this was early in the morning, I don't mind missing out if there's a slide, but if there's a strong move to the upside, because there's an H to M pattern, there's plenty of time if we're going to test the highs up in the 41,000 area for the Dow to get in. Well, this is like a rocket ship, right? SpaceX or something like that. So yes, there's still time, and we are still subject to news. Nothing that much has changed, right? So I'm anticipating that this is both short covering, brand new buying, because I'm a brand new buyer. In other words, I'm looking at, besides the fact that we kept our core positions for subscribers, we kept small core positions positions we love. Bank of America, never got out of it. The IBIT, love the action. That's the iShares. The AIQ, which was holding quite nicely, didn't get anywhere close to our entry point for way back, is now starting to move nicely. Robinhood was acting quite poorly and then all of a sudden kicked in, mostly because, I don't know if I should say mostly because of the Bitcoin move, but it is really influenced quite a lot by it. And we're looking at new positions. Why? Because I want to get into this with companies that have given an outlook that is very positive and have earnings, very good earnings at this particular point, because they can weather the storm of any. You remember the vicissitudes of the market. What's good news today, by 3 o'clock or Friday, it could turn into mistake. So okay, that's how it is. Now let's go to the E-mini. The E-mini right in S&P. Where did I type that? There it is. The E-mini is trading up huge, up 123. In fact, it was up 108 or something like that, and then overnight it pulled back to only plus 80, and then, look at this, it's up 40 points from the overnight lows. This is really strong. This is a slightly different pattern in the futures. Look, This is more like Chapman falling axe formation. So the breakout here is a little bit better and easier to do. If you look at the S&P cash, that's very different. That very much, it looks not quite like the Dow. It's held much better than the Dow. But look at that. Still got a long way to go to get to the 50, 55, 40s. So did I say 55, 40s? I mean 54, 54, 80s. And here we are at 52.87. Look at the QQQ, NDX 100, trading up 12 pre-market at 456. This is the same sort of thing. It's got a long way to go to the 468. Let me just give it to you. 467 area. So yes, there's plenty of room for upside action. I'll go to the NQ, which is the futures. 18,892, up 507. A little bit different pattern because it's got the overnight trading. So it's a slightly, look, let me show you. This is the pattern that I look at a lot. I'll draw it in right here. This is the Chapman falling axe formation. Look, making lower highs, much lower lows, and then all of a sudden makes like a cup formation and breaks out to the upside. What is that pattern? That's this one here. Falling axe formation, goes up, pulls back, makes lower highs, much lower lows, and all of a sudden it finds some support and it breaks to the upside. And let me get out of that. So that's that. IWM. Now, this is going to be very important. I really chewed over it a lot this morning, IWM. This is the cash IWM, because yesterday it pulled back. It wasn't that great, but the actual chart formation has the same falling axe. Look, this is the expanding cone, like that. And that means it could snap to the upside. Not all of them have a long way to go to get the 914s positive. So that's why I'm saying this is a work in progress. And therefore, for any positions that we want to get into today, not having gotten to them yesterday means that I have to wait for some kind of a pullback. If there's no pullback, then I'm going to have to climb on board at higher levels. But I'm actually adding to positions that we have, plus new positions. So that's this is the Russell 2000 futures right now. Look, that's almost testing the high of the 9th of April of 1948.60. We're at 1949.70. Huh? Have we taken that out? Let me just get that right. Yeah, 1948.60, and we're trading at 1946.50 right now, having already taken that out. That is good action. Ho, ho, ho. Is this going to see the Russell 2000 small caps finally get some traction? Has anything really changed? No, just the words have changed. So I'm looking at this, I'm saying, fine, I'll go along with whatever it is. And if there's a sudden pullback, we'll be ready for that. But the selling has been so intense that you've got to think that even just an eye blink that said, maybe it's not too bad, let alone verbal confirmation that Powell is going to stay, that the tariffs will be in negotiations, China will be negotiating. Hey, anything can happen here. Okay, so that's that. All those indices. Look at the SMHs. They were acting horribly. They're up 7.70 today at 199.60. Still not a great pattern, but much better than other rallies in the last 4 or 5 days. I'll be right back. Dow futures up 683. S&P is up 124. Basil Chapman, early edition.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
I've also got a couple of good questions here, but let me just go through this before I forget. Just get carried away with different charts, and I don't want to do that. So, okay, I do want to go from the semis. I want to go to the crude oil. I want to go to gold. So, look, gold is down 90 at 3,330. So what I had said was that I anticipated that there would be a pullback in gold, and it might coincide with any geopolitical economic relief, because for me there's a direct connotation. But most importantly, the question for me, and the reason why we've held the gold, I did say today to take a little bit off our gold position that we've had for quite some time, which has done really well. The silver didn't. Now, let me go to silver, and I'll explain what's going on as far as I'm concerned. Silver's holding down quite well today. It's down just 7 cents. I don't know if there's going to be the traditional rollover from the one rallies and the other one looks around and says, "Oh, you're rallying, I better catch up." And then the other one says, "Okay, yeah, I'm going to take a rest, you can continue." And then they both come down together. I don't know if this is the both come down together, or whether now there's this natural sequence of rotation where gold is going to take a breather and silver is going to rally. The 9-period moving average so far this morning, it's a daily chart, I have to wait for the close, but so far the 9-period moving average is not a bad candle. Is holding quite nicely. The stochastic's only at 67%, and the MACD is strong, the relative strength is strong, and it's pushing away from the 200-period moving average. So I'm watching it closely. The choice of silver stock that I picked, it didn't do very well at all. And I said, okay, that's it. But at the same time, I'm looking at it as if it's an independent unit, despite whatever the silver stocks do. Silver itself, let's see what happens here. But so far, it's holding very well. I needed to go to the GDX. GDX has made a peak F/B. At this point, the day is young, but it is much lower than it was yesterday in the 53s. It's at 48.75. I mean, that's a pretty big pullback from 53 to 48.75, down $1.48. So this just says, appropriately, there should be some digestive phase. Is this it for gold? That's the big question for me. And I'm not prepared to say just yet. We took off, as I say, we took another little bit off our gold position. But the GDX says to me that it is still a place that is active, and I don't want to get in front of it by saying, I'm telling you what it's going to do. It's going to tell me. So if the GDX closes sharply below 48, let's call it 47.70, then I think there's a timeout, and the timeout could last a while. But so far, all the technicals are still pretty darn good. Another question came in. Let me see. About crude oil. So here's the thing about crude oil. It did go to a leg C this morning. It's not a big mover. It's down 57 cents at 63.09 from the high of 64.87. I just think it's not the place right now. I just think that crude oil is telling us that it has been, as far as a Mideast proxy for fear, it's not been there at all. In fact, it's been saying, right at this, even up to this very moment where it's had a rally, it's gone from the 71 area down to the 55s, and now all the way back, a 50% retracement. It's still saying, I have no strength, because that 200-period moving average in the weekly, which is a 63.75, it's like a magnet. And I just think it's going to be stuck there for a while. I don't know if it's going to break down. It doesn't have to break down, but it's just stuck there, right? Okay, let's get on, because there's a lot to do. I want to go to bonds. Bonds are up huge. Bonds are up $1.26 at 115.5. I like this because, as I said before, I'd like the yields to just get out the way. I just don't want them to go much higher. I just want to get out the way. And if you're looking at, say, Toll Brothers, very nice move up yesterday. Peak A, leg B goes to 97.47, and pre-market it's at 100. So I'm thinking, and right there's the 200-period moving average in the weekly. So I think that this is a rally in the general market that could last. We end the month on Wednesday, is that? On Wednesday, a week from today, on the 30th. So I think we can have a pretty decent rally into at least Friday, and then just kind of hang to at the highs. Now look at the monthly charts. Let me go through this again. I didn't do that, but I'll do just very briefly. Look at the monthly charts. Look at the candle. If this candle can see a move in the Dow from 39,190, let's just say a week from today, we have this big move up, and then it gets really choppy, but basically we're holding most of the gains, right? That could turn into a Chapman wave red Roman candle, and then that would just say whatever the candle closes at, watch the halfway marker for the wick, because if at any point it goes for a closing price on any day below the halfway marker, I don't know where it is right now. Let's just imagine it's at 38,000. It says, wow, you can retest the lows of 36,661, and that applies to all the indices. All right. What am I forgetting? I did that. Okay, so here comes the one thing that I think is quite important in terms of rotation through the markets, and that is Bitcoin. Bitcoin is up 21.05 at 93,765. This is a very nice move, and I've been talking about this for over a week. I've been saying it looks like money is going into Bitcoin. I can't say as an alternative to the dollar or as a major currency, but just as a vehicle that has the potential to move against the market volatility. Volatility usually means going down, and that's kind of what we're seeing. Now I can start to join the pattern with a little bit more conviction that says there could be that dreaded H pattern that comes down sharply, making lower highs and much lower lows, that turns into a cup formation. And Bitcoin, I think that the big challenge will be 99,000 to 99,900. The challenge will be to break and close above 100,000 in the next couple of days. Here we are at 93,730. That's quite a long way to go, even though, look at the huge move it's had from the 75,000 level to where we are at 93,700. So Bitcoin is finding favor. IAI, I always look at this as the broker-dealer and security ETF. We've been long since 45 back in 2020, but our vehicle that we've used for a long time now is Robinhood, and this IAI is at 133.47 at yesterday's close. It hasn't got any trading down today, but if it's able to break 136.73 is the 200 period moving average that has been the fulcrum for up and down for quite a while. If it's able to touch that just once in today's Wednesday, by tomorrow, and on Monday, it's able to even, I'm just saying this as a possibility, I don't know if it's possible, but if it can get to the 140s for the first time since it broke down back on the 2nd of April when it hit 143.25 and then just cascaded down to 116.88 on the 7th of April, that will be that V-shaped pattern. That'll be very good action. Now, all of them, all I'm saying is that if they give back more than 30% of yesterday's big move today, that says, back to stalling again. I always have to look at the downside. I've given you the upsides. I want to look at the downside as well. The IWM is actually up 4.79 pre-market at 192.26. That's a good.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Yeah, so I just wanted to show you that a technique I developed years ago, decades ago, was I used trend gauge. I used the short-term trading index, that's Richard Arm's short-term trading index, just two numbers, either on the upside or the downside. If it's on the upside and it's very high, it says that I've changed this, I've modified it a little bit. One of the reasons why the only technique that I've never discussed publicly are the actual numbers. And the reason is that I feel that they're going to change at some point if someone's going to use it. Not only that, they seem to be different on other platforms. I use TradeStation, so I used the TradeStation one. And it gave a reading yesterday, early in the day, that said there's a really good chance, it was very high, that the E-mini futures would be up during the night going into the morning. Well, of course, were they up or were they up? But I just wanted to show you this. This is a page that has a whole bunch of techniques that I use. And I said that this is the weekly chart of the Dow, the S&P, the NDX 100, the SMHs, semiconductors, and then the IWM. And you can see that these red candles and the big green candle, red candle and a green candle this week, there's a lot to go to get back to the highs, just a great deal to go. So all of this is just news right now. The damage that's been done to many of these stocks, I think it's going to take quite a while and a lot of upside action to repair. And that to me is part of the whole bear market. This is the line that we were looking at yesterday. I said it held exactly the Chapman wave inside wedge, dashed red, it's actually pink, diagonal line, target support line it's called, and it hit it exactly on, today is Wednesday, on Monday. And we got that big bounce. And now we're going to have an even bigger bounce. So if you're looking, this is the daily chart that I show subscribers every day. But this is the chart that I needed to show you, and I spoke about it, and I said, and the question kept coming up, are we going to see some kind of an arch formation that tests the left side low? And I said, yes, we are. Do we break that low, or do we not break the low is the question. And I said, that's the residual low. I'm calling the 36,611 low of the 7th of April, the residual low, and that we should be arching over, and how we hold above that line is going to be very important. Well, look what happened. We went right to that line. This is coming up from there, and I should make it a little bit more. There it is. So right there, and I thought about this a lot yesterday at this time. I usually send my newsletter out at 8 o'clock, and I said, this is the first time I'm not going to go to the UDOW. We've had it so many times. But if we do rally, there's plenty of time to get into it. Well, now it is much, much higher. But look, it's still way below the double top. I even put that in as a rectangle for the double top. I see the double tops in this market for the last 6 months have been really important because they've been signaling pullbacks. Doesn't say major downturn, but a pullback at least. So where are we right now? Let me just do this because we've had whatever news it is, economic news at 8:30. Let's see how the market is responding to that. I'm going to go to the futures right here. Oh my goodness. Now we're up 132. So this is a leg D in the 1 minute chart. We're getting back to retest the left side high right there of 54.53, 75 that was made at 7:10 this morning. Here we are at 8:35 a.m. Getting back to test that. So this is going to be really important because every pullback is being met with new buying. So the issue now, and one of the reasons why I say to subscribers, we have to keep our core positions as long as possible because the market might not go down to those lows. It continually has these big rebounds, and if it starts to make higher lows before it makes the ultimate major low for the big move up, if it's going to do that, we want to keep those positions. And those are positions that I really do like. I mean, The only one that we haven't got now, ARKK. I have to change windows right there. Okay, ARKK is the ARC Innovation Fund, and it's up. It's at 48.48 right now. It's up 2.36, and this is just one that I always like to keep it on my radar. We've had it periodically. This is Kathy Wood. It's her ARC Innovation Fund. Find anyone who's bought every single thing. She is the 21st century Welch from GE. Welch did, Jack Welch, you name anything that you could do wrong. No, I'm sorry, not Jack Welch. He did everything right in terms of always coming out to the penny for the earnings. I'm talking about his successor, which was Immelt. And Immelt did everything wrong. He bought oil at the top. He just did everything that you could even imagine that would be wrong. A textbook case, he was rewarded very well, I must say. To be wrong and be rewarded like that is, it's quite a feat to be able to do that. But anyway, she's done the same thing, except I think in this particular phase right now, there's a chance that some of that recovery, that was a really good move in ARC Innovation Fund to go from 29,430. Wait, first of all, you've got to mention that it went from 160 back, the all-time high was 159.70, and that was back in February of 2021, and the low was at, little double bottom low, at 29.43, 29 and 30, 29.43 December of 22. But it did go from 29 all the way to this high that was made right here at 68.43. So we've had it periodically done quite nicely every once in a while, sometimes miss, sometimes get it very nicely, but we only treat it as a trading position. So I'm watching this. I wanted to bring it up only because if the Russell 2000, the small caps, start to move very well from here, and you start to see money coming to the ARC Innovation ETF, that's going to tell me that it isn't just speculation in terms of going for the heavies, going back to, is Microsoft starting to move here? Our Microsoft, which we got at 338, ran all the way to the 468 level, and then it came all the way back to 344.79. Yeah, it's up 10 at 376. Yeah, it's not bad, but it's really struggling. So we'll see where money's going to go to. And that's going to be really important for sustainability of any rally. That's really what I'm talking about. Not news, economic news, eyebrows lifted up or frowned upon.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So one of the things you don't like to see, at least I don't like to see, is where the market pre-open has already had like a 3-day trading phase, which is exactly what we've seen since the close of 4 o'clock yesterday. And that just says that money coming into the market at 9:30 today is looking at a good percentage gap, not points, but a percentage, couple of percentage gap to the upside of almost anything that they want to buy that has had anything like a decent move from the close yesterday, let alone the open yesterday. Therefore, the parameters that, so this is what I'm talking about because it's really important. I take a moment. A couple of people had asked me, what would you do if you've missed some of the things that you would have liked to have bought, and now they are much higher? Well, number one is you have to have a smaller position because now your risk reward is greater. But at the same time, you have to assess whether or not this is the start of a move. And we've had these before where you gap up and you just keep going. But you've also had it where you've gapped up, like that Wednesday, 2 weeks, was it 2 weeks ago? It feels like a year. Let me just go right to there. And I'll just go to we can go anywhere. Let's just go to the S&P. No, let's go to the E-mini because that's live right now. So you can also go to where you were Wednesday week, and then all of a sudden there was that pullback. More than half of the candle of the 9th. Let me just double check. 9th. Yep, 9th was a Wednesday. Oh, good grief! Was it just a week ago? Doesn't it feel like a month ago? It gave back more than half. And it closed pretty poorly, even though it made a fractional new recovery high. And then you chopped around right up until yesterday morning. Even yesterday morning could have been bad. And then all of a sudden you had the GE, had a couple of really good earnings reports. And then look what happens. You bounce like this. So you are looking at from, let's just call it 5,200 to 5,400. That's 200, like a 3-4%. So what do? Well, first of all, you have to assess, is this something that is viable? Is this something that can hold? My assessment is yes, it can, even though there could be intraday sharp pullbacks. I think most of the selling has been so intense that just a relief rally should see new recovery highs over the highs of Wednesday a week ago. And we should get maybe the 200-period moving average of 57.77, another 250 points from here. Maybe that's a little bit too much to expect, but I'm saying I would consider at this point, unless China just says, oh, we refuse to negotiate. That's all. That's what you need. A mega power saying, we're not doing. And that would take us all the way back to maybe below yesterday's low. But at this particular point, I don't see that. I see a little amelioration. I see the market desperately wanting some upside action. Could I put, I can put technical aspects to it. Could I put fundamentals? All I can say is the fundamentals at this particular point are really difficult. They are very complex. And not only that, they're complex in the sense that each for instance, Triple M, 1, 2, 3, comes out with a very good assessment of what their situation, but their outlook is a little shaky. GE comes out and says, our outlook is very positive. Now, Culp is his name. I think his name's Culp. Always forget. He's just an amazing guy. When he came on board GE, that was just like a major. That's the exact opposite. The textbook case of Immelt on the way down for GE is Larry Cusp. Is the news? This is the last couple of years. He's done an incredible job for GE, and it's looking great. I mean, look at the monthly candle, right? So. It's a very different thing. You're looking at the fundamental, but at the same time, aerospace, look, Boeing, up 8.78 today, pre-market at 171.30. All of them have pretty much the same patterns, going for the 169, over the 169 200 period exponential moving average if it opens there. There are a lot of things with tariffs, etc., that are involved in aircraft manufacturing. So all I can say is that this is implying that everything's okay. And we know that everything is not okay. So I'm treating this as a counter-trend rally with respect. In other words, I respect the fact that the market is extremely oversold, that there are positions that have done well. I'm just shocked that our positions that we've had for so long have not had their lows taken out. And that says to me that there are still good companies in this environment. Okay? So within that context, I think you've got to be very selective. And we were I was speaking about this with Jacob yesterday, was interviewed, how within a sector, you can have one stock that's just leading and the others seems like they're doing the same thing. You remember I said, look, this is NOC. This is Grumman, Northrop Grumman. And I still haven't figured out what the notation should be. I've got a B right here. And it's doing great. Just 3 days ago, up at 540. And next day, a little red candle. And then all of a sudden, yesterday, plummets. And yet, you've got some others within the sector that are holding well. Let's look at RTX. RTX plummets. What was the one? Lockheed Martin. Plummets. Holds much better, but look at the weekly chart. Not very good at all. And then GD, which is General Dynamics. Look at that. As if nothing had happened. Look at that candle right there. Yeah, it's gone to a D. Finally, it's gone to a D. So that's what I'm saying. Within sectors, it's the same thing in the financials. It's the same thing. Let's see what J.P. Morgan is doing right now. J.P. Morgan trading up, I'm sure a lot. Yep, up 6.63 at, 242. Let's look at this in terms of 280.25 down to 200. That's an 80-point decline. Look at Goldman Sachs. Goldman Sachs goes from 672 down to the 440 area, 445, and it's trading right now up 16 at 536. Not a great pattern. So that's what I'm saying. All right, so within the context of where you go at this particular point, let's see, someone asked me about Palantir again. Palantir should be up nicely. Yep, up 5.64, 99.63. But all it's doing really is getting back to that incredible resistance at 99 that's stalled every other move. So does it break out today? The signs are pretty good that it's going to try. So I'm saying be very selective. Okay, that's number one. Number two is, let me see. A break coming up. Yeah, so, okay, as it stands right now, I'm considering that this is a rally to respect, but it's just too much too soon, and we're waiting for pullbacks to be able to get into positions.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
So here we go. And I'm looking at this. Now, I wanted to mention this pattern. Gosh, did I do that? Maybe I didn't. I drew it in for those of you who look at my work during the breaks. Here, this is the cup formation. So this is the most important one. I draw this in all the time. It just, especially overnight, you see this over and over and over. Sometimes it takes a long time, sometimes not. You go from one point, it's the reverse Y formation in the Chapman Wave methodology. Oh, I don't know if I can get this in time. I'll do this. Doesn't matter. We're going to do it in time. There we go. It's this pattern right here. Remember we spoke about the H pattern? Well, the reverse is the green, a Y, reverse Y. So when you get to that high, how you test it is going to be very important. Well, that's exactly what we've got right here. And I anticipated that we would get to that high, maybe break it by a fraction to confuse. There's at a G, so that means it's a fractional high. Means there's never an H in the Chapman Wave. But this is the cup formation. It's more like a bowl formation. How we pursue the upside action further, or whether we start to digest the gains, is really dependent on this. My anticipation is that at this particular point, up 135 in the E-mini futures at 54.50, now the upside's kind of limited. We've got to be looking at some kind of a pullback. So a pullback's a big deal. You get a pullback. Is the pullback back to where we were an hour ago? Is it about where we were at 3 a.m. this morning, 2 a.m. at 53.80? That sounds huge. That's 70 points. But we're up 136. I do believe that there's going to be money flowing in, and then 10:20, my usual time, I'm not going to be here, but 10:20 to about 11:40. That's where we're going to see whether or not we get some kind of a digestive phase, and that's really going to be very important. If it's later in the day and it's very sharp, then you can consider that there'll be a pullback into Thursday. I don't know about Friday, but at least into Thursday. So in the meantime, as it stands right now, this is an important moment. In fact, yesterday, this time was an important moment. We've got that huge move to the upside. You can see on the chart, it's like a couple of days worth of upside move all done in hours. So will we give back some? I think we will. We're waiting for some pullbacks to get into, add to positions or get into new positions. We'll see what happens. Have a wonderful day. Check out my opening call daily newsletter.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader